Bloomberg Audio Studios. Podcasts, radio, news.
This is the Closing Bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlet Fu.
I had a lot to choose from in terms of individual gainers, but I had to do Fannie Mae and Freddie Mac. Fannie Mae up just shy of 19% in today's session. Freddie Mac up almost 21% today, jumping initially after a Wall Street Journal report said the Trump administration is getting ready to sell stock in the two enterprises later this year. Bloomberg News confirming that as well. Fannie and Freddie right now trade over the counter. They're accustomed to volatile swings, and we definitely saw some big swings, certainly in today's session. All right. Also, Gilead Sciences, another outperformer. In fact, it's the number one gainer in the S&P 500 and the NASDAQ 100 today. That stock up more than 8%, the highest in 10 years after boosting guidance. The company lifted its full-year outlook after strong HIV drug sales in the second quarter, helping revenue and earnings modestly beat analyst expectations. And the drug maker also raising its guidance for annual product sales by about $100 million. So this is a company that's been looking to expand beyond its core HIV drug portfolio into cancer and other therapeutic areas, and they've had some mixed success, but nonetheless investors liking that latest update. And then Monster Beverage, this one, second best name in the NASDAQ 100, fourth biggest gainer in the S&P 500, up about 6.5%. The company reported earnings and sales for the second quarter that beat the average analyst estimate, and analysts noting strong global momentum in the month of July. Piper Sandler upgraded the stock to overweight, raised its price target. Morgan Stanley also raising its price target, so definitely some outperformance there. Jess, over to you.
I'm going to start off with the worst performer in the S&P 500 today. Trade Desk, the ticker TTD on this, down 39%. Its worst day since September 2016. So you have so many different analysts on the sell side that have been bailing on the one-time market favorite. What happened here? Growing fears that its advertising technology will get steamrolled by none other than Amazon. Another company, of course, I'm going to point out, Sweetgreen, ticker is SG on this, down 23%. This was its worst day since November of 2021. Unfortunately, the salad chain cut its sales guidance and it also missed second quarter estimates there. So now analysts are saying that 2025 is turning into a disappointing year. That stock's down over 70% year to date. And then lastly, looking at Under Armour, UAA is the ticker symbol, down 18% today. So it's worst day actually since April 3rd. So when you're thinking about apparel and footwear maker here, its Q2 forecast ended up coming in horrendous. And of course, that was weakness in North America. So it forecasted adjusted EPS and revenue that fell short of those consensus expectations, guys.
All right, let's go over to the bond market. You had treasuries falling across the curve, pushing yields higher anywhere from 2 to 3 basis points. And really, there wasn't any clear catalyst. There was some anticipation, of course, of the July CPI data next week, as well as PPI, that could alter expectations for Fed rate cuts. Perhaps some people also saying that the declines reflect overhang from the coupon auctions that we saw this week. $125 billion worth of new supply. There's also a lot of supply of new corporate credit as well.
All right, guys, it's been a pretty heavy week. We ain't over yet, and we might get more from the White House. We're monitoring certainly some of the meetings that are going on there with foreign officials. Having said that, we got a few lighter stories that we wanted to bring to you and share with you on this Friday. Jess mentioned the drop in Sweetgreen shares today, and we did see that stock really take a hit. They're apparently discontinuing. I had no idea that they were offering French fries at all, but they're discontinuing their Ripple fries.
Healthy fries.
Fries you can feel good about.
Healthy fries? I would rather just have the greasy good stuff for
avocado oil. I mean, if you're going to have French fries, why not just go for it, right?
That's the thing. I feel like it was mission creep on the part of Sweetgreen. We did hear from the CEO on a call with analysts saying that basically customers like the fries. That's what he says. But they added too much complexity to restaurant operations. So they're
also not enough people ordered it. So they would make the fries, then they would sit there for a while, and then when you actually did order the fries, you'd get the fries that had been sitting out for a while. They were air fried, and they used avocado oil instead of seed oils, which I don't know about you, but I like my fries crispy. I don't want them soggy and sitting around.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.